Welcome to my class. We are doing types of index numbers, and in this we finish with the consumer price index, the wholesale price index, and the index for industrial numbers, and now we are doing some other index numbers, like you must have heard about Sensex, agricultural, and all of that. Just let me hurry up and tell you. Like for example, so index for industrial production, all three we finish. Other index numbers used up: agricultural production index, Sensex, that is stock exchange index, and the producer price index. So we are going to do all of these just for your information. And also nowadays we have what is known as a human development index. Often we talk about that, but that I'll do in the next class. But right now, just to understand this, because this is given in your NCRT, I just want you to know. Let's just take the first one, agricultural production index. So index number of agricultural production is a weighted average of the quantity relatives. Basically, its base period is the say 1981 to 82, and in 2003-4 the index number of agricultural production was 179.5. It means that the agricultural production has increased by 79.5% over the average of 3 years, that is 1979-80, 1980-81 and 1981-82. Food grains have a weight of 62.92% in this index. Now we come to what is known as Sensex. So you come across news items often about this Sensex. So what is Sensex? Let me just tell you that it is the short form of the Bombay Stock Exchange Sensitive Index with 1978-79 as base. The value of Sensex is with reference to the period. It is the benchmark index for the Indian stock market. It consists of 30 stocks, which represents 13 sectors of the economy, and the companies listed are leaders in their respective industries. If the Sensex rises, it indicates that the market is doing well and investors expect better earnings from companies. It also indicates a growing confidence of investors in the basic health of the economy. So, often in the newspaper, you hear about Sensex has reached so many, say the Bombay Stock Exchange has closed at say 9,000 odd points or 18,000 odd points. Investors' wealth rises by say 18,000 crore. So the Sensex, so such reportings go on. And not only that, even on today you will find in the business news channels, real-time Sensex reporting goes on. So for example, say out of the 4,000 big companies listed in the stock exchange, to know about the general sentiment of the business market sentiment, a sample of 30 big companies are taken in the Sensex, as we just talked about it. So that is just to form a general opinion about the market by the investors. So it is now, this is on the basis of free float market capitalization count. So what is this? What is this free float market capitalization count? It is a very important aspect of it, which you should go through. Like I can give you a very small example. Say if a company has 5 shares and the cost of one share is rupees 10. So the cost of total shares is rupees 50. So that is what is known as a market capitalization count. So let's take the example of free float now. What is free float? Free float is after deducting the owner's share that they keep with themselves. So they don't let it go, they do not release it into the share markets. So for example, if an owner decides to keep 2 of the 5 shares, so 5 minus 2 is 3. So only 3 shares are there available for the stock market, and 3 into 10 is rupees 30. So this is free float market capitalization, sort of. So So the rise, just to end this Sensex, let me tell you, the rise in Sensex, whenever it is at a high level, it reflects the good health of the economy in general. And as the share prices increase, reflected by the rise in Sensex, the value of wealth of the shareholders also rises, and vice versa. So if I say if there is a fall in the Sensex, then that reflects the, say, bad health of the economy in general, and as such the share prices will fall. So that is reflected by the fall in the Sensex. So the value of wealth of the shareholders will fall. So the bearish and the bullish tendencies, as these are the words that are used. So bearish, if it is bearish, means a bear with its paws kills or brings down its the person it's attacking, or the animal that it's attacking, and that's, so it's bring down. Bull means bull with its horn tosses its enemy, whatever. So that is known as an uprise. So so this is a sort of a, in short, it is Sensex helps us, the investors, to know about the basic health of the economy, and on that depends the growing confidence. Now we have what is known as the, so talking about the Sensex, please go to Bombay Stock Exchange, you have the Delhi Stock Exchange, find out what is there, and it's very interesting though, but I don't think we have too much of it in the syllabus. So I mean, it's a little bit given in statistics for economics in NCRT, and that's why I'm doing it. Now, producer price index. So what is producer price index? So we have done what is known as index for industrial production. Again, that is producer, but that is based on your quantities. Now this is price index. So producer price index. So talking about producer price index, this number, that is producer price index number, measures price changes from the producer's perspective. It uses only basic prices including taxes, trade margins and transport costs. A working group on revision of wholesale price index 1993-94 is equal to 100 is inter alia examining the feasibility of switching over from say the wholesale price index to what is known as PPI, that is producer price index, in India, as it is done in many countries, many nations. So another widely used index is the Human Development Index, which I will be doing sometime later. So I hope you've understood, and with that we come to the end of the index numbers, the types of index numbers, that is consumer price index, the wholesale price index, the index for industrial production, and the other indices that we use is agricultural production index, the Sensex, and the producer price index. So please make notes of it. Go to your, I want you to go open your notebooks, write it down, and open your course books, look into the matter, write down notes, go to the library, and you'll find it much more interesting than what it is.